Hey, Kevin here, top 1 financial advisor and best-selling author, and we are here to talk about the stock market. Today, we need to talk about my top 5 consumer staple stocks. Now, what are consumer staples and why am I talking about it today? Number 1, I'm talking about it today because you asked me to. If you go back and look at yesterday's video on healthcare stocks, everybody said consumer staples, or most people said consumer staples. So here we are. Now, what are consumer staples and why are they important right now? Consumer staples are the stocks and the companies that you have to support whether you like it or not. Meaning, as prices go up, there are certain things that you need to function as an adult, as a parent, as a person, as a caregiver, whatever it is, you have to support a business in this space. Not necessarily this specific business, but a business in this space. So I'm gonna give you my top 5. I'm gonna give you one company that's not necessarily on the list and why it's not on this list right now. Obviously, these things do grow and change as the market and information that we have does change. You'll see that some companies may be on a healthcare list and consumer staples. I'll tell you why. You'll see some companies that I may have talked about, 2 years ago, still on this list because they were good then. They still might be good right now. So you're going to see some that are repeated for good reason, and to me, it might even be an even better reason. And then we'll go through the list. All right, so let's go ahead and do it. Consumer staples. Another reason is, other than the fact that you have to have it, prices can be passed on quite easily. For example, my daughter is like a year and a half. I don't know the months. I'm not that type of parent. She's over a year, but she's not 2 years. We're going to deal with that. So she's not potty trained yet, and we have to buy Pampers. I don't know how much Pampers cost, and frankly, I don't care. I'm going to buy them because I need them. And this is good for the consumer staples companies because as prices are going up, like prices of chicken wings are going up, I noticed that, and my wings are more expensive, and I'm not a fan of it. But I don't have to have wings. I can switch to something else. We have to have the Pampers, and if they go up by 50 cents, I don't have a choice. I really don't have a choice. I don't like it, but I don't have a choice. So with that, the place that I buy Pampers is CVS. Now, CVS is not on the list because I go and buy Pampers there. They're on the list because it's a good company. They're up 43% in the last 6 months, up 50% in the last year. Now, that was the exact same number I gave you yesterday. I just took that same number. So yes, it could be a percent or two off from what happened in the market between yesterday's video and today's video. So asterisk there, could be slightly different. For context, the entire stock market, the S&P 500, is up 16% in the last 6 months and up about 24% in the last year. So that's CVS. I talked about yesterday that yes, they are in the healthcare space because they have a pharmacy. They do sell drugs. They do certain small minute clinic things. So yeah, they are healthcare because they provide healthcare services. And they're also in consumer staples because they sell the stuff that you have to have. When I go and buy Zyrtec, which is the allergy medicine I use, I go into a CVS, which is a healthcare thing, but also a consumer staple thing because I have to have it. So they fall very nicely there. Kroger is a company I talked about a lot. Ticker symbol KR is interesting because I talked a lot about it in 2020. I talked about Dollar General, Costco, and Kroger as being one of those super solid defensive stocks that paid dividends that were relatively safe because 2020 was so crazy. I made a little bit of money out of Kroger. It wasn't something incredible, but I forgot about it. And it's up 23% in the last 6 months, up 49% over the past year. And I'm still looking at my giant sheet of paper from yesterday. I'm just adding more scribble to it. So Kroger is one I don't currently own. I wish I just held on to it and kept it. I didn't. Again, this is 2 years removed. I did that back in 2020. And this is a company right now, this is something I would do for a short-term trade. All of these I would be comfortable with holding for the long term. So you want to get it now, you want to do something short term. Of the list I'm going to give you, I think Kroger is the best for something short term. And if I can get it somewhere between $47 to $45, that's what I'm going to do. Speaking of that, I told you yesterday if I was going to get into a short term trade with XLV, that was the healthcare ETF. I did get into that one, and I'll let y'all know what happens. Good or bad, I'll let you know what happens there. So Kroger is something I want to do for a short-term trade just because of the way the company is moving and its quality. So I can hold it for the long term, make probably even more money, or do some short-term and try and trade it and be fancy. So we'll see there. Estee Lauder, ticker symbol EL, it's the beauty company. I told y'all about this one a while ago. It is still good. I think I talked about it in June or so. It is up just 7% in the last 6 months, but 35% over the past year. It's a solid company. It's been solid for quite a while. It was good back then. Feel free to go back and watch that video, and it's still good now. Currently, I don't own any shares in it, but very solid, very easy company to understand. I think all of these are actually pretty easy to understand. You got a grocery store, you got CVS, you got a beauty company. And it's easy, right? So Estee Lauder, super symbol, ticker symbol EL. That's on the list we want to talk about a whole lot, so I'm not going to go a whole lot into it. It's Kroger. It's up 28% in the last 6 months and up 44% over the last year. You know what it is about Costco. You know what it is. It is so good that when I talked about it in 2020 and bought it in my, I think it was my Roth IRA, I had it there, forgot about it, came back, and y'all saw that video, and I was like, oh my god, it's up 50%. I had to go back and make sure I still had it, because I just forgot it existed, which is actually a pretty decent investing strategy when it comes to long-term investing. You go, you do your research, you get some quality, you forget it exists, and come back to great returns. That is the ultimate investing goal. So Costco is doing well. I'm gonna hold on to it. I really don't see myself selling. Costco is one of those, based on what I've seen the last 2 years and just how the company operates, it's a long-term hold, pays a solid dividend. I'm not gonna change that. So Costco's gonna stay there. The next one is Pepsi. Now, Pepsi does pay a very healthy dividend, and again, it's one of those companies that, unless you drink water out of your Brita filter and you don't drink soda or anything else and you don't snack, then you probably don't care about this company. But a lot of people do. When you think about Pepsi, and the reason why I like it a little bit more than Coke, the stock, not the drink. I would probably flip those things around, because I'm a Sprite type of person, vanilla Sprite, if you want to get specific. But anyway, that's a conversation for another day. But stock wise, I like Pepsi a bit more because of the way Pepsi is organized. They don't just sell the drinks, they also sell snacks too, like Frito-Lay. That hurt Coca-Cola, ticker symbol KO, during the pandemic, because Coca-Cola makes money in different ways, as well as Pepsi. So you may think of, I'm going to the grocery store at Kroger or Costco, I'm going to buy these big packs of Sprite or Sierra Mist or whatever, right? Well, don't forget that when you go to a restaurant, they also have those fountains, which these companies are getting paid from there too. More of Coca-Cola's money came from those the fancy soda machines and vending machines and all that kind of stuff, compared to Pepsi, where they had less of the revenue from that and more revenue from snacks, which Coca-Cola doesn't really offer in the same way. So it's a little more diversified from a company and strategy perspective, which is why Pepsi made the list. Both pay dividends, both are doing quite well recently, but I'm rolling with Pepsi. So my top 5 here are CVS, we talked about yesterday, Kroger, Estee Lauder, Costco, Pepsi. Now, there's one company on this list that is not on here, and it's a company I own, and that is Target. Some people put Target in the consumer staples, stuff you have to have, and also in the consumer discretionary, stuff you don't necessarily need, like a giant screen TV. You don't need it, but they sell it at a Target. Now, the reason why Target's not on here is because right now, today, the last 6 months, they're down like 11%. I can't in confidence be like, invest in something that's currently losing. Now, do I have faith in Target? Yeah, but I don't necessarily invest in faith. I invest in data, I invest in momentum, I invest in things I can prove. I can prove these 5. I hope at this point that Target is going to do well. And they have a lot of on paper, they have a lot of the things that suggest that by June, which is my moving day when I go back and reevaluate, by June they will be solid. Historically, with the exception of this period, this last 6 months or so, they're usually very strong, especially for the long term. So do I like Target? Yes. If I'm trying to invest in something solid right now and have proof or evidence that it's going to continue on an uptick, those would be my 5. If you want to stretch and say I'm a buy low and I'm a hold for the next 5 years or something like that, then maybe a Target would be one of the best performers on this list. And I would venture to say, and this is speculation, because y'all know I don't do 5-year projections or anything like that, but if I had to pick from these 6, I would probably go with Target as being the one that's going to gain the most money in the next 5 years compared to the next 6 months or the next year. Here's a problem though, and why I'm not doing a 5-year list. I don't know what inflation is going to be. I don't know what interest rates are going to be in 5 years. That's far too long. I can tell you this, and most experts are saying 3 to 4 interest rates hikes this year. And I know that inflation as of December is up the highest it's been in 40 years. So I'm using the information I have right now. And those 5 are, I think, the best right now. The best for 5 years. Maybe it's a target based on how they've moved in the e-commerce space. So there's a case for Target longer term. So if you want to do something long term, Target might be one of those places. If you want to do something medium to short term, next 6 months, this year, protect yourself from inflation right now, I think those 5 are the best ones. Of the 5, I already own Costco. We talked about that. And then I'm going to hopefully get me some Kroger if I can get it at like anywhere between like $45 to $47 a share. Right now it's like 50 or so. All right, that is it for me. I will talk to, wait, sorry, my bad. I always sign off too early. Before you go, you got 3 choices this time. Y'all pretty much run this channel, so we can continue the series and talk about financials, which I know we've done a little bit of already. We can talk about financials, which tend to do well if interest rates rise. We can do REITs, real estate investment trusts, which tend to do well if interest rates rise, as well as inflation too. We can go there. Those are 2 areas. Or I can do a grade A portfolio. So someone that asked, hey, can you take a look at my portfolio? Let me know what you think. Make a video on it. I'm like, yeah. So y'all get to vote to Friday's content. Which one of those 3? Do you want financials? Do you want REITs? Or do you want me to grade somebody's portfolio with y'all? The choice is yours. Vote, like, subscribe, comments below. All right, that's it for me. I'll talk to you guys later. Bye.